Thanos Papasavvas is head of currency management at Investec Asset Management. Thanks so much for joining us this morning. So these stress tests that Chinese government are said to be undertaking at the moment, isn't that more evidence that China is preparing to make a move with the yuan soon?
Yes, generally we have seen that China has been tightening its policy, certainly from the interest rate point of view, and we would expect the currency to be next. However, due to the political situation or the slightly more sensitive Sino-US relationship, it has to be relatively cautious as to when it starts triggering that position.
In other words, as long as the U.S. are pressuring them, they're not going to do anything.
The more their backs are against the wall, the more unlikely they are to move. So.
Right. Now, the SocGen economist over in Hong Kong, a guy called Glenn McGuire, he says that markets have got it wrong. They're pricing in a gradual appreciation between 2 and 3% by the end of the year. He says that we could be looking at perhaps a 5 to 10% one-off, one-time appreciation of the yuan, perhaps even in April or May. Is that not a possibility?
It is certainly a possibility. We think the former is more likely, similar to the level of appreciation we saw in the few years previous to 2008, where we saw a gradual appreciation of the yuan. It also gives a slightly more comfortable area in which the Chinese corporate will be able to establish itself.
How do you think these stress tests are going to go then? You've got the Chinese government trying to see what the impact would be on China's industries if the yuan were to appreciate. And then you have the Chinese government saying, hey guys, don't make us do this too quickly. If we do it too quickly, you could get a double dip in the economy. What are the potential consequences if it is too soon?
Well, I think that if we do take the first case scenario where we would expect a 3 to 4% appreciation over a gradual period of time, the risk to the underlying structure in the industry will be less serious, less significant. So in that sense, we would think that more gradual approach is more favorable. In terms of the continuing tightening of policy, they will continue doing the interest rates. So we would expect the stimulus to be coming out from the interest rate point of view and allow the currency to be more of a political play, especially with a U.S. relationship.
So what are you advising your clients with regards to the yuan then?
Well, we don't think the yuan is that attractive locally or regionally. There are other currencies which are much more attractive, such as the Philippine peso, the Indian rupee, the Korean won, the Malaysian ringgit. So even if as we do expect the Chinese renminbi to appreciate over time, other currencies locally are much more attractive.
Do you agree at all with the argument that the yuan really isn't that undervalued? And this is what Jim O'Neill of Goldman Sachs says. He says the more important thing is that China continues to increase its imports.
Well, we have seen exactly a lot of those currencies a lot of the local currencies have appreciated considerably against the yuan, and locally China has had a significant change within the region. So yes, the magnitude has decreased over time over the last few years.
Okay, Thanos Papasavvas, head of currency management at Investec. Thanks so much for joining us.